You are watching the weekly CFD overview of global financial markets. The US dollar started to recover against other major currencies since the beginning of this week. The drop came as a surprise on Friday when the US currency dropped sharply in spite of better than expected non-farm payroll data. The euro opened this week stronger against the US dollar after speculations that the ECB might opt for early interest rate hike decisions. However, on Wednesday, democratic elections in the Netherlands and the Federal Reserve interest rate decision represents major potential volatility triggers. Since Monday, the US dollar-Japanese yen currency pair has been trading around the level of 115. The US Federal Reserves will make decision on its benchmark interest rate, and just a day after, on Thursday, the Bank of Japan will decide on the overnight interest rate levels for the yen. The British pound was in a two-day uptrend since Friday until it became clear that the Brexit deal has been finally adopted. At the same time, the Scottish Prime Minister stated that her country will organise a new referendum on independence probably sometime between fall 2018 and spring 2019, which only strengthens the case for British currency long-term gloomy perspective. Global equity markets were mostly down in the previous week. Investors were cautious ahead of major events such as monetary policy meetings of the ECB and the Federal Reserves that will take place this Wednesday. The gold price is in a sideways price action and is responsive to the US dollar value factor, naturally moving opposite to the US dollar. However, the increase of political risks in Europe may push investors towards gold, as on Wednesday evening the elections results in the Netherlands will become available. Depending on the outcome, the gold price might exhibit an uptrend, especially if the right-wing party gains a high proportion in Dutch votes. The oil price is in a strong downtrend since last Wednesday, pressured down by a constant oil rig count increase, which stands at 617 in total, the highest since October 2015. On Monday, the price of oil touched the 3-month low, and on Tuesday, an OPEC report showed that Saudi Arabia drastically increased its output by 236,000 barrels a day, pulling the oil price further down to its $47.3 per barrel. Will the Saudi output increase represent a major crack on the OPEC deal of oil output cut remains to be seen. You are watching weekly CFD overview of global financial markets.